Happy Friday. And yes, it's a happy Friday indeed as we continue to see rates hold this improvement and decline further. As we kick off this glorious Friday, the 30-year fix opens at 6.79%, down from last week's 6.96. And yes, that is room for celebration. And many of you, if you're like me, are asking the question of what's driving this decline? And is this opening a new normal? Meaning, can we expect to see rates continue to fall as the year progresses? So, today I want to dive into really what drove the most recent declines this week, what we can expect going forward, and close with how to win your offer in a highly competitive market. So, this week really was quiet with the relation of economic release. Really, the drive in mortgage volatility, market volatility was centered around potential of a slowing economy, trade concerns with the talk of tariffs, as well as consumer confidence really seeing a sharp decline. And then the culmination this morning, the release of personal consumption expenditures, which is ultimately the Fed's favorite gauge of inflation. So, not to get super granular, my update in the text really dives through what occurred this week. Encourage you all to subscribe as do a ton of work ensuring that we're disseminating the most prudent information to you all. So this week, again, the continued narrative in Washington around uncertainty with our trade partners, which in turn spills down to Main Street and consumer confidence. We saw consumer confidence levels at the lowest levels since 2021. Again, ongoing concerns with how tariffs will impact production here from a domestic standpoint. And then yesterday, we received initial jobless claims. So those individuals filing for unemployment for the first time. And we saw a pretty significant rise to 242,000 new initial jobless claims filings, which was the highest we've seen since 2021. And again, sparking the concern, layering in the tariffs, trade concerns, and then slow down here from a domestic employment standpoint. And then fast forward to today, the release of personal consumption expenditures. And again, going backwards, we saw inflation earlier this month show signs of increasing as it blew past expectations. Well, today, personal consumption expenditures came in right in line with forecasts, which for right now, markets are really enjoying that as the concern around what the Fed will do going forward in relation to rate cuts, there's still room for negotiation. So this is obviously a fluid, evolving situation, something we'll continue to update you on. But for right now, the momentum that we've experienced over the last few weeks with rates declining, as it sits right now, that this will hold and potentially see further decline in the weeks to come. So with that, would like to close with how to win in an ultra competitive market. Now, I've been talking with a ton of agents, ton of clients throughout the country, and we're seeing an increase not only in listing, but also competition. So really our buyers, your buyers, in order to compete in this environment, it is critical that they are partnering with a real estate agent professional, someone that truly understands the dynamic of the market and is doing the work. With that, working with a mortgage professional like myself, my team, to ensure that the financing is properly vetted. It is still so surprising how many loan officers, mortgage originators are not doing the thorough vetting up front. And all of that put together to ensure that the buyer is confident and capable to perform in an escrow situation. If you would like to talk more about this or any of the other topics covered today, please reach out. My team and I are here and willing to assist. As always, let's make it a fantastic Friday and an even greater weekend. Thank you.